Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now certainly dollar strength seems to be the theme of the moment because we've had this rally in the last couple of weeks and it's been helped by the retail sales data that we had on Friday, and that's sort of maintained this sort of improving trend that we've got for the dollar, breaking through some key levels on Friday against the Forex majors. And it's some interesting moves here. Will it continue this week is the big question, because we've got US inflation, and US inflation is not necessarily on the CPI count, the Fed's preferred measure, but still it is an important one for the markets. Not only that, we've got the Fed meeting minutes. So two key factors I think that will sort of determine which direction the dollar is going to continue in, because it's, as I said, it's broken through some key levels and it needs to maintain that to continue this rally. Now, in terms of the Forex markets, what have we got to look forward to? Well, we're seeing that the euro dollar has, as I said, broken through key supports at $1.1330. Now that sort of opens up the April low. The key April low is 112.13, and that seems to now be under pressure because we've got this increasingly sort of negative momentum on the euro dollar. Will it continue though? As I said, we've got these two key US data points which could well drive that sentiment on the euro dollar. And in terms of cable, we've got the a similar sort of move really. We've seen a breakdown on cable below $1.44. Will that also mean now we're going to be testing the 143, which is the last real support between that and the key sort of March-April lows of around that $1.40 big figure mark. Dollar yen is an interesting one because it's now consolidating. This is sort of into the now the realms whereby the dollar is performing much better against the commodity currencies or the higher risk currencies, and versus the sort of more safe haven plays. It's not performing as well, and that one in terms of the dollar yen is an interesting move there because it's consolidating. That's the rally on the dollar back towards sort of the 108.20 to 109.50 area. Now that's sorry, 109.50 area. Now that's sort of the range that it's finding itself trading in at the moment. I'm still of the belief that selling rallies is the way to play dollar yen, but still at the moment it's undecided in terms of the exact next move. Now, in terms of equity markets, we've seen the equities just rolling over again. The momentum on the S&P 500 has been lost. It is finding support above the 2022 to 2034 support, which is key, I believe, for the markets. But could this S&P 500 chart be the real catalyst that it sort of induces big breakdowns on these markets? Because you've got key supports that are sort of playing out throughout these markets. You've got, as I said, 2022 on the S&P 500. You've got 9,737 on the DAX, and you've got 6,036 on the FTSE 100. So these are all key levels that the market is looking at and it needs to hold on to. Otherwise, we could see a pretty rough summer ahead for equity markets. In terms of commodity prices, well, the gold chart actually is one of the best performing assets against the dollar in recent weeks, certainly since the Fed announcement in late April. In the last couple of weeks, the gold price has still been performing pretty well against the dollar. Now, the gold price has sort of corrected back towards the key breakout support of 1260 to 1282. Will this now prove to be a buying opportunity? That near-term correction is now going to be sort of unwinding the momentum that generates the next bull leg higher. You still need to see, I think, sort of any sort of dovish Fed sort of hints or any sort of data announcements that would suggest that June is off the table. Maybe that would sort of help to drive the gold price higher, but still, I think gold remains pretty well supported at the moment. Oil price is another one, actually very strong moves we've seen on oil, breaking out to new highs dating back to November. It sort of continues to move higher. We've seen sort of Goldman Sachs now coming out and saying that it's sort of joining the ranks really in terms of the houses that are calling for more balance or a balancing in the front end, in the fundamentals on the oil price. That seems to be coming through, and that's helping the oil price on Monday morning. Certainly the weekly oil stocks have been helpful for the oil price in recent couple of weeks. will that again be the case on Wednesday? So what are we looking forward towards for the next few days? Well, we've got the economic data for the inflation numbers for UK and US on Tuesday. They will be important because, as I said, obviously that will be helping to drive certainly cable fundamentally, but also anything dollar related as well. In terms of Wednesday, we've got a pretty packed Wednesday because we start off with Japanese GDP. Will Japanese growth stay above or move back above 0%? It's 0.1% is the expectation there for the first quarter. And then you've got UK unemployment and also the earnings growth. Again, that's a second sort of inflation leading figure that you've got for the UK this week. So you could expect a fair bit of volatility on sterling, I would imagine. And not only that, you've got the Fed meeting minutes on Wednesday. Will we get more hints as to what the committee were thinking? Because a lot of the members have been saying in the last couple of weeks, coming up with hawkish suggestions, but whether the Fed meeting minutes sort of reflect that or not will be interesting to see. And then we sort of move towards the end of the week where we've got Australian unemployment and UK retail sales, just to round off the week with a couple of numbers there. But I wish you good luck in your trading for the rest of this week, and I will speak to you next time. Thank you.